Hi, everyone. Welcome to another session of uLaw webinar. Today, our topic is, accounting. We want to focus on trust and general accounting. Before we actually talk about our product, I actually want to bring up, the two Law Society guidelines that I'm going to refer for today. One is the British Columbia Law Society guidelines. Another is the Ontario Law Society guidelines. Ontario actually has two, one for lawyers and one for paralegals, and if you look at both of them, they're fairly identical, so I'll just use one because I just have a little bit of real estate issue. And as you scroll through these Law Society guidelines, I hit upon this very interesting page called Types of Accounting Systems. And similarly, when I do the same for the Law Society of British Columbia, I hit this very interesting page, Your Accounting System. So it looks like the Law Society has very, very important guides that they want you to subscribe to when it comes to accounting. And these two look very different on the context, but they're exactly the same thing. So let's go through what is accounting system. We'll examine some basic principles of accounting, and then we will see what is the difference between a normal accounting software and something that's very, different about legal accounting. And why should legal accounting be a little different? Very, very important questions. We'll try and answer them. At the end, at about 3:50, I'll open the lines. The chat lines are always open, so you can keep, adding your questions, but I will answer the questions in the end. So if you look at the guidelines from LSUC or similarly from British Columbia, or you can even look at other jurisdictions like Manitoba, you will see that they talk about different kinds of types of systems that a legal practitioner should have. It can be a manual double entry system. That the key advantage is it's simple. It's your own system, inexpensive. The disadvantage, as everybody knows, amongst your time that you're actually giving to your legal practice, you have to do all these things. Like, it's very time consuming. It does not scale well if your business is scaling very highly. And there could be a lot of errors, because there's a taxation computation and all that. So any manual entry system is prone to errors. So that is the advantage. It's simple but inexpensive, but, the disadvantage is on the other side. Now, things like OneWrite, where you are basically kind of posting yourself to one kind of, subledgers and maintaining it. Again, simple and inexpensive, but slowly you get into that accounting mode of doing things. Again, very time consuming because you're maintaining all your transactions and there are a lot of arithmetic errors. Then comes the world of spreadsheets. Now, there's no limit to spreadsheets. You could be as smart as possible in Excel or OpenOffice, maintain your own spreadsheet. A lot of computations that you need to maintain. Again, the errors, because if you have done a formula error, you will face these errors when you do reconciliation or your trust balances or something like that. Then from these manual systems that the Law Society recommends, we move on to what we call general accounting software. Now, general accounting softwares are very popular. FreshBooks, QuickBooks, Xero, these are very standard examples. Like, they have automatic calculations. They do posting of subledgers. They can produce financial reports. But, they require a lot of training. I mean, it almost means that you have to be a practitioner, a lawyer, a paralegal, whatever you are, and you have to be an accountant too, because now you need to understand the depth of subledgers, journals, ledgering, posting, reports. So you kind of become a semi-accountant when you use these kind of softwares, like when you use QuickBooks or anything like that. Then comes the next level, which is legal accounting. Now, the first question that people can ask is, why can I just not use general accounting? Why should I use legal accounting? And the answer is pretty much there in the first line. General accounting softwares like QuickBooks and FreshBooks are not designed to handle trust account naturally out of the box. It's not an out-of-the-box solution. You need to customize it to handle trust accounting. So accounting solutions that are very tailor-made for legal practices address this basic principle of handling trust accounting. And then the rest is pretty standard, they have to have all the accounting features. Now, because of trust management, the training is fairly, it requires a lot of training, and the cost is phenomenally high. So this is where, most of, the legal practitioners struggle. I can get all these advantages, But then there are some disadvantages that you can get, from legal accounting software. Moving on to, the left side, I just want to look at how, other jurisdictions like British Columbia have approached the same problem. They talk about basic of accounting. How do you do this? Like, how do you achieve ledgers, subledgers? So if you look at their stuff, they basically write in their bookkeeping guidelines for, practitioners, they jump into what they call chart of accounts. Now, right here, they made you an accountant. They're trying to explain you how to manage a business, how you need to maintain your trust, your assets, your fixed assets, your liabilities, where trust is also a liability, and then things like expenses and revenue. So either way, if you look at it from a bookkeeping guideline perspective, this is the kind of software that you should be thinking. I mean, we are not saying go with uLaw, but we're saying this is the kind of software. It has to be designed to handle trust accounting. It has to do all the automatic calculations, but it has to do subledging. This is basic requirements, and the consequence of it is expensive and requires a lot of training. What our goal has been in our company is, can we eliminate this pain as much as possible? Expensive, we've tried to reduce it by making our software $1 a day, so we're just $29 a month. So that's the way we have tried to tackle the first disadvantage that Law Society has mentioned. Requires training. This is where what we have tried to do is introduce a concept called no trust accounting. What does it mean by saying no trust accounting? Well, it means that if we can transcend the practitioner in the software to concentrate on his matter and defocus him off accounting, while accounting is actually happening automatically in the back, and everything here is just reports, then you're kind of achieved that where very less training is required and the software is very intuitive. So in that aspect, I want to introduce our software, which will be the point of discussion in the webinar from now. What does uLaw provide as per the guidelines, from the Law Society? So let me pull out the Law Society's guidelines and then start explaining one by one. So in terms of requiring training, what we have done is we've seamlessly integrated the accounting portion with the matter management portion. So what we mean by that is, rather than taking an accounting module separate and then pushing, the legal silo on top of it, which makes you still behave like an accountant, we've done the reverse. For us, your focus is primarily on matter management. That's what you want to do. You want to do your contacts management and matter management, and we seamlessly translate that workflow into what we call matter accounting. The second advantage that you see is the accounting module has to include very powerful analytics. I mean, you cannot stop short of just a fee book. Like, fee book is data that's just shown, showing how much revenue you make. It has to be translated into very powerful analytics to tell you how your practice was, what are the places where you're making revenue, what are the adjustments that you can bring in, how you can actually get things like, how much revenue has not even come into my business. So a powerful accounting module has to be, there has to be an adjunct powerful analytical module staying right beside it to aid the power of accounting that it's actually, calculating. Last and final thing, that we want to say is, it's very important the reason why they're suggesting to do all these things is because they want you to be, compliant with the guidelines from the Law Society. Now, in this case, this webinar, we have specifically taken LSUC, but you will see that our software caters to every province in Canada. You can just change your province, and then it'll automatically start ledgering and journaling and producing all those stuff according to that province's jurisdiction. So with no further delay, what I'm going to do is try to get into software and start showing to you the benefits that you can actually achieve by doing all these three things. So let's get into the software. So for this purpose of this webinar, I created a client called Pierre Lacrosse. He's in Toronto. And let's create a matter for him. To do that, we'll create a matter. And let's say the matter is, I'm going to assume a standard family matter. Let's say it's divorce. And then you can click on the code and then mark it as what kind of matter it is. So I'm going to mark it as family and wills and hit the save button. Okay. Now, the first and foremost thing that we do here as part of accounting is setting up your rates. Now, in settings, under your taxes and rates, your rates are already set up, but you could change that and say, for this matter, maybe I'm expecting, to charge the client $250, and you could do that. Now, this is where I want to focus a little bit on the BC module and the Law Society requirements in great detail. Now, they say that the software should be designed to handle trust accounting by default. Look at that right here. Pool trust account is there in the chart of accounts. And then, in the liability, it's right here. Now, what is chart of accounts? Chart of accounts is basically describing, your company in a way that you can manage its accounting automatically. And in uLaw, when you create an account, automatically the software creates the entire chart of account as per the guidelines of what is required for a legal practice. So if you go into our accounts, you see in assets, we automatically create a separate account called trust, because we know that these are control accounts. They have a process. You need to handle things in a particular way, so we do that. The next thing is under liability, we create a trust amount client, which is again another way of telling you how to actually manage your trust. We expect there's going to be quite a bit of legal revenue that's going to come. We automatically start creating lots and lots of categories for you, and you can expand on these categories and say, oh, I have criminal matters in Kingston. I have, I do immigrations. You can come up with your own categories and start putting them this way. Finally, expenses, and we understand that disbursements play a very, very, very key role in your practice, because these are expenses that you're having on top of your clients. So inside our chart of accounts, we automatically, under client expenses, we have different kinds of client expenses that you can incur, and you don't even know how the software is actually doing it, but it automatically starts doing all the ledgering that these two modules are actually talking about. Okay, so let's now get into the matter. I'll show you a walkthrough of every time you do something in the matter, how accounting actually happens in the back. So let's say this client gave you a small retainer. So you click on new retainer. Let's say it was about $1,200. Now the modes of payment could be any of these. So let's say it was a simple check. You accepted it, and you actually applied it in the matter. Now, if we go back to the guidelines, they say it has to post subledgers. Now, what we have done in our software to make it no accounting is taken this activity out of you. So that means when you actually post it in the matter, if I go into accounts, you will now see that Pierre Lectros actually has 1,200, and I click on it. These are his two journals, and when I click here, the subledger is here for $1,200. So this is what they are actually saying, that you need to post subledgers. The software automatically does it, making it a no accounting software. Let's go a little further into it. Let's say there were two matters. So I'm going to create another matter for this client. And this one, let's say it was a house purchase, right? Now, this client gives you $1,000 and says, you know what, I want this 1,000 spread across two matters. He says, I want 800 to be applied to one matter, which is the purchase of the house, and 200 to be actually applied on the other one. And now notice the difference. Like if I say that I'm actually taking this 1,000 and divvying it up as 100 and an 800, the software says you can't even do that. It says, no, sorry, you are not even allowed to do that. The amount is not distributed fully, okay? So unless you actually even do that, this is where the power of a software comes into play. Like, it's not like a spreadsheet where a calculation error can happen or make you do that mistake. Here, the software can control your workflow and say, I'm not even allowing you to do that mistake. If it's $1,000, you've got to distribute it among two matters, and you can do an apply. And now, if I go back to accounting and look at that $1,000, so here is the new $1,000 that appeared, and if I click on it and I look at the subledger, now it tells me that it's actually divvied up into two parts. So now, based on the information that the software has recorded on what you put in the matter, we will be able to generate those complex reports that the loss society is expecting you to maintain using subledgering process. So let's even go further. For example, let's put some basic dockets. Let's say it was an initial client meeting, and I want to charge him for 1.3 hours. It is some document drafting, and I want to charge him a flat rate, like, say $283. I'm just coming up with some random amount, and say you want to actually put something like, for example, another client meeting that you had to get some more information, but you want to give that as a pro bono, so you can just say autofill that as a pro bono and hit the save button. So now the next step is when you actually generate an invoice, what should happen? There's a series of happen in accounting when you actually generate an invoice. It should actually mark your accounts receivables, mark your HST or GST or PST based on which province you are, try and see how much funds you can actually translate from trust, calculate all that measures, start producing you those reports, make you converge towards that process of doing a client transfer and all that stuff. And the software should also prevent you from errors. Like, for example, in this matter, you put all the dockets, right? You haven't even done an invoice. Let's try and do a trust transfer. So if you say action, trust invoice payment transfer, it should come up with nothing. It says don't have anything to transfer. So even if you try and transfer, it should try and actually prevent. So let's now actually say you accidentally want to put money directly into general when you actually haven't invoiced yet. So let's do that. Let's do a client payment and say I want to put into my bank an amount, and it should not even allow you. So the software should have the capabilities to prevent you, from even doing the wrong thing. And that's where, what I was showing you really matters. Like when I hit the trust transfer button, it shows you that I can't even do a transfer. So this way you're prevented of trust errors. So let's now get into the next mode of actually generating an invoice. Let me generate an invoice. Now I'm going to mark this one as complete and mark as paid because I know there's money in trust, and let me say generate it as a uLaw themed invoice, and I do an invoice. Now this is something standard you're familiar with, docketing and invoicing. This is what you do. What the software should be capable of doing is translating that into what they call the subledger system. So that means after it calculates the HST and says this is what the invoice number is, and this is what the date it was raised on, and that's the balance of trust. If you actually go back to the software and hit the question mark, the software should be able to guide you that, saying that, yes, one invoice was raised, that's the amount, that's what in trust, and you're allowed to do a trust transfer. Same way, if I hit the action, trust invoice payment, it allows me now to do the trust transfer. So let me now hit the question mark again and take the trust transfer. Like my connection is a little bit flickery here. Wi-Fi is behaving a little bit off. Let me just turn it on. Let me just make sure my net connectivity is good. Yeah, okay, there you go. Sorry about that technical glitch. There was a small problem with my Mac that it lost its Wi-Fi signal, but I'm back. So let me actually now go back and hit the question mark, and it tells me that I can do a trust transfer, and I'm hitting the trust transfer. and it brings up what I can actually transfer. So I click the amount. It tells me that I can transfer $514 from my trust account into my bank account, which is TD. And if I say I'm doing an electronic fund transfer and my requisition number is here, notice that the software didn't even allow me to transfer a cent more or a cent less. It basically prevented me right then and there and told me that this is the amount that I can actually transfer. So when I hit the transfer button, I apologize, like I'm having some network difficulty in my Mac here, that it's losing Wi-Fi constantly. Sorry about that. And when I actually download Form 9A and I enter my I can actually see that the form is actually now downloaded. So if you now see the electronic trust transfer form was automatically downloaded with all the information automatically filled in. So now let's go back to accounting and actually see what the software would have done. So if I go to accounting and look at accounts receivable, I will now see that it automatically put the ledger for the legal fee. The legal fee, when I click at it, says that's the legal fee. It was a real estate matter. That's the HST. And when I actually click on it, it even tells me what that was for and why that was for. So the software basically understood an accounting touch point here. It said, this is an invoice for a flat rate for this matter called house purchase, and it took that information and translated that into an automatic ledger for you. This is where the accounting starts getting powerful, because when you actually do now a fee book, right, we should now be able to understand this particular invoice that we generated, show it to you right here, right? So this is what the Law Society expects you to maintain a fee book. The fact that I raised an invoice, we're able to translate that into a fee book for you. Now, taking it back into the matter, what we can do is let's look at now a disbursement. Let's say you had a disbursement, new disbursement. Let me pay it from general. Let's say I paid a court fee, and the fee was about $70. The software automatically requests you whether you want to put an HST or not. Now, let's say that was paid to Brampton Courthouse, and the way you paid that was, say, using your TD Bank check, and you wrote Brampton Courthouse a check. The software allows you to print a check and hit the save button, and when it actually brings up a remittance and shows you that the check will actually look like that. And you could actually print this one, mail that check to Brampton Courthouse. And now let's look at accounts. So when I look at accounts, I want you to take you to expense on client account. And you should now see the court fee that we paid for Pierre Lacrosse, $70 right here. And when I click on it, it automatically does the subledgering saying that it belongs to that. And that's where now, when the Law Society is expecting you to do a journal called a general disbursement journal, and you do a download, this court fee has to actually appear with all the proper details. Like, for example, check number 678 is here, Brampton Courthouse is here, who it was paid to, how is the expense, what's the GST. So this report, we're able to generate it basically because our chart of accounts captured what you actually did in the matter and translated that into accounting information. And if you had hired a bookkeeper or if you had hired an accountant, this is exactly what they would do. They would actually go into the chart of accounts and say, oh, it was a court fee, and they will enter all the details so they can produce that report that the Law Society is actually looking for, where all these information can actually be captured. So what I'm going to do is I'm just going to keep this in the side, open, the bookkeeping guidelines from LSUC as an example, show you the two. So there it is, general disbursement. So date, method, paid to, Brampton Courthouse, particulars. It was, what is the particular? That's court fee, and that's the basically the file number, the expense, the HST, right? In other provinces, it will be GST or PST, and then the total. So in less than, a click, we were able to capture all this information very seamlessly for you on this disbursement screen and translate that into a general disbursement journal that the Law Society actually asks you to produce. Now, let's say you actually want to recover this fee. So let's now do an action, do a trust invoice payment transfer. You must be wondering why it's not even allowing me to transfer. I already incurred the charge. The reason why the software does not allow you to transfer that from trust is because you haven't invoiced. So the software will make sure that you actually invoice it. So let's actually do that invoice. In fact, before that, I just want to hit the question mark so that there is nothing to pending transfer because I haven't invoiced. So let's actually go ahead and invoice. And when you actually, again, I'm going to mark this as paid and do the invoice. And when I do the invoice, now I'll see that the invoice will have the disbursement amount, and it tells you that the client actually does not owe you anything because you need to transfer from trust. And when I go back to the software and hit the question mark, it pulls me out and says, yeah, you need to transfer that amount from trust. So when I hit the question mark, it clearly shows you that there's a pending trust transfer. And I hit the transfer button, it'll bring me up that menu. And if you notice in that menu, it does not allow me to transfer the previous legal fee. It only allows you to transfer the new disbursement that you actually incurred. And that's $79.10. You cannot transfer a cent more or less. And then you can transfer this one. Maybe you wrote yourself a check, right? Let me call it 123. You took this check and actually posted it into your disbursement, into your general account. Now, there are a couple of things that the Law Society will actually expect you to actually maintain. Let's now look at a few things. The first and foremost thing that the Law Society will ask you is, do you maintain client trust ledger? You've been getting money from trust and withdrawing it, right? Are you maintaining that? Let's do a quick trust ledger. We can say document generation, ledger, trust, and do download. And you will see now that the trust ledger actually for Pierre Lacrosse has everything. So if you remember one of the matters, the divorce, we just put the two retainers, we haven't worked on it. $1,400 is the balance. And if I look at my house purchase, $800 was there. $540 was the first time it was withdrawn. $79.10 was the disbursement, and there's $180.76 left. So the trust ledger also gets automatically managed and maintained in uLaw. You just work your way in the matter, which is what you're used to, which is like, disperse, docket, invoice, disperse, and then we translate that into the accounting ledgers. Let's now continue further and let's put more dockets. Let's say I look at this analytics and it tells me like, hey, 77% of this matter is actually consumed. Should I go further or not? And you say, you know what, let me go ahead and bill him further. Let's say you put another telephone conversation maybe for an hour or 1.5 hours telephone conversation, and you hit the save button. Now the software immediately projects saying that, hey, the client actually owes you money. So let's now raise an invoice and see how the software can actually prevent trust errors. Now the biggest problem that happens in trust is you either under withdraw funds or you over withdraw. I mean, under withdraw at least is not bad because you know that you need to withdraw more and you can actually handle it. If you over withdraw, that's like, really getting yourself into a lot of trouble. And that's exactly what we want to prevent in this software. So right here, you raised an invoice. Now the invoice is a large amount. Like, if you actually look at it, the invoice was, roughly about, let me figure it out what the invoice was. The invoice was for an amount about $250 odd. Now for $54 odd, there is some amount already left in trust. How do you transfer that? So when you click on this, the software says, hey, this last invoice, $254.25, was generated. Do you want to transfer that from trust? And when you say yes, it does not even allow you to transfer a cent more than what's there. So you cannot even transfer more than $180.76 from trust. Okay? So you select your trust account, and maybe you can even go to the bank and actually withdraw cash. You can say, you know what, $180.76, I'm going into the bank and actually withdrawing it. You could do that. Or you can go back to the matter and now hit the question mark, and that software now should tell you that the client actually owes you $73, and that cannot be a trust transfer anymore. So the software right here prevents you from doing over withdrawals from trust. And that's why, if you look at the guidelines, they clearly mention to you that you need to maintain these subledgers and ledgers and journals so that you can match them and you exactly know what to transfer and you don't over transfer or under transfer. So let's now say the client actually makes a payment. You accept the payment. It is $73.48, and it's assigned here, and do an apply. And it's all done. So the matter now has come down to $0, and all the bookkeeping ledgers are automatically generated. Now let's move on to the subject of analytics. Okay. So if I generate a fee book, and let me generate a fee book for, say, this quarter. I do a download. There are several things that I've been handling. Like, there have been several matters from Melanie and Sam and Pierre that I've been handling in this account. And it's good to get all this information. So if I look at the fee book here from the Law Society's guidelines, and I look at the fee book here, it's fairly, consistent. Like it basically has the dates, the fees, and the disbursements, splits them into HST, sums them up, and gives you a total view of what is there. The Law Society says that's good enough for fee book. But is that really good for your office? Why can't we take it to the next step? Kind of give you an idea how much money you've been actually making. It tells you like families and bills was that much, real estate was that much, small claims was expenses was that much, right? Kind of takes you to the next level so that you can understand what was coming. So there's even a matter where you actually lost money, right? Like it tells you that, like, there's loss. Like basically you did something, the person never paid you, so there's a loss. So it even captures all those details and tells you who is that person. Ellie Jordan, he never paid you that $300 that you actually invoiced him. It tells you Sam DeCosta is your best client. Pierre stands right below him. Melanie is right after that. So analytics in a software can actually take you to the next level of how your behavior can be with respect to your business. So understanding this deeply is very, very important. For example, if I go to the software and say, can you generate an invoice balance report? So I click on document generation, other invoice balance, and I do a download. There could be several reasons why invoice balances are there. One, the client hasn't paid me, and he's been paying me for a long time. Two, there could be a reason why I actually didn't do what was actually supposed to be done, which is transferring the money from trust. If the software can pick up and say, hey, these are your bad customers. This guy hasn't paid from April to 2013. This person has a very high balance from 2014. In 2 seconds, that analytics has brought you very, very valuable information. And for example, this client, Ramarao, he actually has an invoice balance of $500 and he does not even owe me that money. The reason is because I forgot to do a trust transfer. So if I look at it at the end of the day, it tells me that even though I have to get $56,000 of payment that's pending, $17,000 was just sitting in my pocket, and I didn't even realize that I have to actually, withdraw it. So that's the power that we can clearly see that the software can actually bring to you, and you can realize that right away. Now, taking it to the next step for analytics is things like P&L statements. Let's say I want to do a quarterly profit and loss statement, or even a yearly profit and loss statement, right? I want to see how my year is looking so far. A standard P&L will just tell you this. It'll tell you, hey, I made this much money in civil, this, my contracts and my expenses were so much, and these are my expenses, like, in rent, meals, this is what I had. But if you really take it to charting, you can clearly see that amongst all of the silos, it looks like my real estate and my contracts are doing good. All other silos, I'm doing an average business. My expenses are my biggest revenue. That's not good because these are what I paid for, what I'm recovering here, right? It kind of quickly gives you a view of where you are, how you can improvise your business, what are the areas maybe that you should take some corrective actions. It even tells you how your expenses are, like, your expense on the clients is your largest expense. Your office expenses are generally low. That's a good sign, and it gives you a view of how that is in charting, and overall gives you a view that your business, the revenue is this much, expenses this much. So analytics, for coming out of an accounting software, can really take your accounting view of the business to the next level. Let's now go back and see how we can do other things, like, what are some of the other guidelines. So for this purpose, I'm going to create another contact. Let's say a client. This one is Peter Cross. I'm going to skip all the address creation, go to the matter, and I'm going to show you a very common error that most people do and how software can actually help you with that. So let's say this is a landlord and tenant matter. Okay, so this is a landlord and tenant matter. Let's say rent eviction is what, the client is, and the client actually gives you $350 in cash. You are unsure what to do with it. If you go into the software and say, oh, that's actually a payment that the client made, and you actually clicked on it, the software will not even allow you to put that $350. It will not even allow you. The reason is because you haven't done the work yet. Let's do some small work. The initial client meeting was, an hour. That means you're charging him $150 plus HST. So let me just quickly raise an invoice. And even if I raised an invoice, and now I'm trying to, so I know there's balance on this account. The biggest issue that people again do is they realize that, oh, I've raised an invoice, so that means I can put the entire payment in. Now if I try to put that, let's say the $300 of cash that came in, the software says, no, the maximum you can put is $169.50. So it prevents you right then and there and says, don't be careful when you're actually handling client payment. The reason why that has to be done the proper way is you can only put it as a retainer into your trust account, because $300 is much larger than the work that you've actually done, right? Whenever he gave you that, so let's say he gave you cash, and you do an apply, the software will immediately say you have 24 hours to put that cash that you have into your bank account. And even here, there are a couple of ways you can do it. Like, I put this into petty cash account, but you can actually create your own cash account here called Trust Cash, and you can actually do that. So that way you're managing Trust Cash separately. So let me do that. So I'm going to create a cash account here called Trust Cash, right? I'm going to park that money temporarily because I'm walking to the branch in a few minutes, but before that I need to park it temporarily into my Trust Cash, right? And then what I can do is when I actually deposited the money and came back, I can say in accounts, I can say action, transfer, and do a bank transfer and say from my Trust Cash, I'm transferring to my trust account $300, and I can say trust deposit for Peter in bank. So as you saw, the software clearly has a key advantage here, because even if you're doing subledgering, cash transactions are two transactions. One is when you receive the cash from the person. Second is when you actually deposited the cash into the bank, and software will allow you to catch that as two subledgers. Now, you didn't do any ledger or subledgering, but when you actually go and look into accounts and you look into your Trust Cash account, you can show your auditor, look, saying that, see, I got the $300 as a retainer, I deposited it, on the other day. So you could basically show to him how you actually did that. Okay. That kind of brings me to kind of the basic parts of trust accounting. So I've kind of demonstrated, how seamlessly you can actually do accounting, everything within the matter, and get all your compliance reports without any issues. Now, what I'm going to now get into is the second part, which is how to do business accounting, also very seamlessly, not making you an accountant, and still get very, very valuable information. For that, if you go into accounts, and I'm going to say action, and I have some business expense, like for example, an office expense, and I bought some paper. So I can say paper from Staples, and let's say it was bought for $100. The software can immediately calculate the HST on top, and you can say, I actually paid for this from my pocket. And you can say it was paid to Staples, right? And hit the submit button. Now, what we can do is, if you go to owner's pocket account, we can tell you that the company actually owes you $146.49, which includes the $113 of credit. So even office accounting can actually be done, even though it's called office accounting, can actually be done very, very seamlessly in certain softwares like us, where you're not behaving like an accountant. You're just walking through the menu and putting stuff, and it's actually recording certain things. And now when you do that, if you can click here and do an expense book for this quarter and actually get a full picture of how your expense was for this quarter, that can be very useful as well. So expense books are no different from fee books. It's just, expenses are things that are happening in the reverse direction. All the parking expenses that you had for various clients, and business and corporate expenses, these are not for any clients, are all aggregated and shown here. And it shows you how your expenses were. Printing and stationery was that much, conference expenses were that much. Gives you a quick feeling that you have your expenses very well under your control, and shows you here what are all the different expenses that you're having for each and every client. Notice that your business and corporate expenses for you is about $226, which is not bad compared to the amount of expenses you're having for other people. And then kind of gives you a view of expense on client versus expense on business and how things are. So to summarize, what we have basically achieved in the product is made it very simple for you to work your way just in the matter, where you will just put dockets and disbursements and retainers and work your way in the matter, and automatically everything will be displayed here, while everything else will be handled properly in the other place. So at this point, what I'm going to do is I'm going to open the lines, and if there are any questions, I can answer them. I sincerely apologize. There were a few technical glitches in my laptop because of Wi-Fi, but it's been pretty stable for that. If there are any specific questions that people have, I can answer them and showcase them how to do this in the product.
Hello.
Hi.
Will this be available on YouTube?
Yeah, that's a good question. We are planning to upload this very presentation on YouTube. We will be doing that. But what you can do is you can always go to our channel. We have a YouTube channel called uLawPractice, and I'm going to go there right now. And that channel basically has a playlist. And if you go into our playlist, you will see what we call uLaw answers, and that talks a lot about what I just talked in this presentation. Everything that you actually talked about is all available here. Like, for example, how did I do my invoice? And, let's say best practices. This is some of this video clearly shows to you, like, what are the best practices in accounting, how do you actually do it in uLaw without actually, like, being an accountant. Similarly, we walk you through, like, profit and loss, how to inject capital into the company. So what you will see in our software on these YouTube videos is we try to make you stay on the matter panel and do everything on the matter, and we will translate that into what the Law Society is calling complex subledgering process. Does that answer your question?
Yes, it does. Thank you.
Thanks.
Yes, and this is Praveen with the uLaw sales team. Then there's a question on the chat session about the different documents that we generate that are Law Society compliant.
That's a good question, Praveen. It depends on the jurisdiction where you are. I'll quickly walk you through, because I have the LSUC one, I'll quickly walk you through and then I'll also quickly throw some light on the British Columbia one. Okay, so if you look at the LSUC one, if I go to page, and all these Law Society documents are very similar, okay, because they all ask you to maintain the same thing. The first thing that they ask you to mention is trust receipt journals. And what are trust receipt journals? These are, every time you got money into trust, you need to maintain things in this order. We actually showed that already in uLaw how to do. You say accounts, document generation, journal, receipt, trust. And then, if I just do that, I should now see, I think there were about a couple of trust transactions that I put. Yeah, for example, the $1,200 for the divorce matter, and then the $800 and the $200, that it's the same check that we split into two parts, and I showcase that. So that's one document that you need to maintain. The second document that you need to maintain is called the disbursement journal. We already showed you that, that was under, again, journal, client. It can either be this way or that way, and when you do that, you will basically now see the disbursement journal. See for Pierre, all the stuff that we actually incurred out. The next thing that we wanted to show you is a ledger. I already showed you ledger. Ledgers are of two types. They could be trust or general, and both of them are here. You can just say trust and do a download, and it will show you the trust ledgers, right? And these are very important to note that these are things that you didn't create. We are creating for you by the very nature how you actually do things in the matter page. The next thing that I wanted you to show you is, they ask you to maintain receipts. It's exactly the opposite, of receipts now in general, and then disbursements in general. And we also saw the ledger. We talked about fee book. So again, if you go to document generation, the fee book is right here. Now, we go an extra step of giving you the analytics. So if you want analytics, you can click on analytics and you'll get more than what the Law Society has. And that's a great question. It brings me up to this reconciliation statement. Now, every 31st of the month, you need to do reconciliation statement. Now, in uLaw, reconciliation is very, very quick. Let's see what the Law Society actually talks about reconciliation. It says quite a few things. It says for trust reconciliation, you need to check off all your checks. You need to make sure that your journals are all identified. You need to list all the outstanding checks. You need to make sure that your deposit books are good. You need to make sure that there are no bank errors. You need to find your balance. And then they describe you what they call a client trust listing process, that if you go client by client by client and find out when was the last date of activity for them and how much is the balance in trust. Now, this typically can take roughly between, I would say it will take about a couple of hours to do. So let's do this in uLaw. So in this trust, a very, very unmanaged trust, we have a lot of trust money, and let's do a reconciliation. So I'll say document generation, reconciliation, trust. Let me enter my bank account. Let's say 3736 1.58. I'm entering whatever is there, right? And let's say this check was never cashed. immediately it'll tell me that that's the balance. So I need to adjust that
Scheduled for next Tuesday.
and do the download. When you actually hit the download button, we will just generate a reconciliation statement for you in 2 seconds. I mean, this one is not going to be a correct reconciliation statement, but look at that. It has the bank balance. I just pulled out a check that was outstanding. Here you go. That's your check. Gives you all your details. And obviously, these two didn't reconcile because I put as if there was one outstanding check, and that was my problem, and that's why it didn't actually reconcile. But in 2 seconds, you got the reconciliation statement. It should not take an hour to reconcile. Now, the law obviously tells you to do this on every 31st of the month because it's a very, very tedious process. Now, if the process is as simple as what we have made it, just a document generation, reconciliation, trust, and filling these and getting it done, why would you not do it on a biweekly basis and be more closer to your bank transactions and keep your bank books more up to date? So by making reconciliation process very simple, we've achieved another close with the Law Society's guide. So I think this is what the Law Society actually kind of recommends. There's more stuff that they recommend, like for example, how to maintain cash payments. We handle that too. So in matters, like for example, you received cash in this retainer, and you could actually generate a receipt for that, a retainer receipt for that, and it could be in English or French. The Law Society has guidelines on how that receipt should look like. Like for example, it should have the payer of signature of the payer because it's a cash receipt, so they really want you to make sure. Oh, this is not the cash receipt. I think the cash receipt was in the other. Yes, so yeah, the $200. Sorry. To tell you very clearly, how it was actually distributed and how much was actually transferred. So it'll very clearly tell you, how it has to very clearly tell you the signature of the payer and the authority. So we confirm to that. Client ID verification is something that they mention. We do that all the time. You go here and say document generation, client ID verification, download, and then in 2 seconds we will generate that for you. Here you go, and it has everything that the Law Society actually expects. And this is an editable form, so you can just say driver's license, and you're pretty much done. So if you go through these guidelines one by one, you will see that everything that is mentioned in this document, uLaw does it. Like, for example, Form 9A is another clear example. Right? The Law Society wants you to do Form 9A in a particular way. And you find Form 9A. Find it today.
I think we'll pause there. I think there's a few more questions.
See, all the Law Society guidelines questions are there. I don't have time to go through the British Columbia ones, but you will see that I have to change the jurisdiction to British Columbia. It will do the same thing there.
So, another question is about where is my data stored? I think this is a little bit more generic question about the whole software itself, not so much accounting.
No, so much. Okay, the data is stored in 2 places, Montreal and Ottawa. We are an Ottawa-based company, so we do all our backups and retrievals out of Ottawa. Our data center are in Montreal. It's on the West Island and in the island. So that way we have like a protection over power surge. So even if one phase of the data center actually goes down, the other one is protecting it. And for disaster, if you actually look at, the British Columbia Law Society has actually produced a great paper on how cloud softwares need to produce their restrictions. They ask for minimum 200 kilometers. So Ottawa is exactly 200 kilometers from our data center, and we have our secondary zone in Ottawa.
Okay, great. Another question is, can I request my accountant to access my uLaw account?
Oh, that's a great question.
I think sorry, go ahead.
If you go into the settings in uLaw and go into permissions, you have different kinds of accounts that you can create. You can create an assistant account, a coworker account, and an accountant account. And if you look at that one, you can control what the accountant actually sees. You can say he does not see my contacts, does not see my matters, does not see my calendars. He only sees my accounting data. You can do that. And you can say what permissions. There's a small fee for this account. It's $15. and you can actually share this with the accountant if you are planning to do bookkeeping with an accountant. Any other question from you?
That's all the questions I got from the chat.
Okay. Yeah, I think we have come to a closure on our webinar today. Thank you for attending. Praveen, if you have any final closure comments, please go ahead.
No, I want to thank everyone for making it. Again, I hope it was informational. If there's more information you'd like to know about uLawPractice, please visit our website at uLawPractice.com. And if you're interested in knowing more about what the software can do, we do encourage you to register for a no-obligation free 30-day trial. So thank you, everyone, for joining us, and have yourself a fantastic weekend.